Hello, I am Austin Wilson, research analyst at Hixon Zuercher Capital Management.
And I'm Josh Robb, financial planner at Hixon Zuercher Capital Management.
And we are here to provide you an economic and market update for the month of May, looking back at the month of April. So, starting off, Josh.
Yes.
Not so good news in the markets in the month of April.
It was rough.
It was rough. That's actually continued through to where we are now. But for reference, the S&P 500 for the month of April was down 8.72%.
For the month.
For the month.
Wow.
The NASDAQ, so think tech, large cap growth stocks, it was down 13.24%. The Dow Jones Industrial Average was down 4.82%. Small caps, they were down 9.91%. Emerging market stocks were down 5.55%. International stocks were down 6.54%. And even bonds, they were down 3.81%. So,
which is a lot for bonds.
There was nowhere to go.
Yes.
Nowhere to hide.
Yep. So, in other news, and more exciting news.
Exciting news, yeah. That was exciting in the wrong way.
There was a lady, and she was buying lottery tickets, and she put $40 into a machine and was selecting her lottery tickets. She normally would buy a bunch of small lottery tickets with that $40. Well, this rude customer bumped into her while she was selecting them and forced her or made her accidentally choose a $30 ticket. So most of her money went to one ticket. Rude customer didn't even say sorry, and they just walked out the door. So she takes her stuff, goes in the car, scratches off, wins $10 million with that accidental bump purchase. So
wow, that's
sometimes
crazy. Yeah. That is crazy. Next up, building on what I just talked about, which was no fun, in a rare occurrence, both stocks and bonds are sharply down this year. Not very often this happens, as I'm going to talk about in a second. A standard 60-40 portfolio, so 60% S&P 500, 40% U.S. Ag for bonds. It's down more than 10% year to date. And this is the worst performance of this kind of portfolio since the global financial crisis. In fact, it's so rare that this is only the fourth time this has happened since 1977.
Wow. So this is a rough time for all different asset classes.
Investors are feeling some pain.
Yes. Well, this right now we're seeing a lot of people transition jobs. There's the great relocation of jobs going on right now, as there's a lot of opportunities out there. There is a job post hiring. If you like the post office.
Okay.
Yeah. It's not a bad gig, right?
Give me my mail.
There's a post office located in Antarctica, and they're actually hiring.
There is a post office in Antarctica.
You have a couple job requirements. You sort the mail. You sell in postage stamps. In fact, where this is located, it's a tourist area. So remote, but a lot of people, they get about 18,000 visitors each year that come here to visit. You have one other job, though. You got to count penguins because it's part of a research project. So they're tracking penguins.
I bet they have a lot of applicants.
Well, you would think so. The problem is it's a single bedroom. There's no flushing toilet, no running water. The toilet's got to be emptied daily, no showers. They only bring stuff every few days. You're limited communication. And if there's an emergency, it could take up to 7 days to get you out of there.
Now, flat earthers will believe that that's entirely fake.
Yeah.
Because
they don't think there's an Antarctica anywhere?
It's like real. It's like the perimeter.
Okay.
And it's like all government. It's a government conspiracy that you're not allowed to go to.
Well, that's post office, part of the government.
So I'm thinking that's giving some legitimacy to our globe.
Those penguins.
Whew. Another thing, one thing that's driving these markets down, because it's down a lot across the board, is inflation, which has continued to run hot. The March CPI report showed consumer prices up 8.5% year over year. This is really the highest level we've seen in 40 years, and excluding food and energy, which are more volatile and more cyclical, core CPI was still up 6.5%. We are going to be getting another read early in May on that one.
Okay, good. So speaking of April, that's what we're talking about.
It is.
April 1st is April Fool's Day.
Yep.
You ever wondered where that came from?
I have, because it is the one day of the year. As a sidebar, that
you stress yourself out.
Well, I always, if I get on Twitter, I don't know what to believe
anything.
I try and I'm just going on like a normal morning. I'm having my coffee, drinking my Twitter. You know how I do, and I'm like, oh wow, that's crazy news. And then I'm like, it's April 1st.
Yes.
So anyway,
it can't be true,
Josh.
People actually do not know the origins of April Fool's Day. So that's like the biggest joke of April Fool's of all. Is they can trace it back to at least Europe during the Renaissance.
Okay.
But there's different traditions that may emerged into this. One that involved fish, because the translation part of the original phrase involved fish. And the idea, this was back in Rome, was it's easier to catch fish in the spring.
Yeah.
And so it's more foolish fish, right, to get caught. And so you're like foolish like the spring fish.
April
kind of what
fish.
they're saying. So either way, no one knows, but it's a fun tradition.
So speaking of hot inflation,
Yes.
this hot inflation has forced the Federal Reserve to act in response to it to cool down the economy. In March, the Fed gave us our first Fed funds rate hike since 2018.
Yep.
At that point, they increased the rate 0.25% and announced that they would be discussing the balance sheet runoff or quantitative tightening later.
Yep.
So that was what they did in March. Now, flash forward on May 4th or
Yes.
Star Wars Day.
Star Wars Day.
On Star Wars Day, the Fed raised rates another 0.5%, 0.5%, and they announced that they would begin quantitative tightening in June at $47.5 billion per month, increasing to $95 billion per month in September. So they did give the details on that, and this is, all in an effort in April to slow down the economy, slow down inflation, and bring some pricing stability back to our economy.
Yes, because inflation's driven from, and at least in ours, 70% is consumer
spending.
So if we can slow down the consumer's purchasing, you slow down inflation.
Yeah, so you make borrowing costs more expensive, you make money less easy to attain for businesses and consumers alike, you're going to slow down your economy.
Yep.
Now, the Fed is in a tough situation where inflation is so hot that they're going to be forced to act more quickly than they normally would, which causes some risk they may do too much too fast. So it remains to be seen how that will play out.
So during the pandemic, you saw some news of people on airplanes getting kicked off for unruly behavior.
Unruly.
Now, just to note, this has been going on well before that. For instance, in 2018...
Okay. Thought this was the news, but now it's just a history lesson.
History, but it is relevant that this is nothing new. There was a passenger flying from Phoenix to Boston. Okay. So, a couple-hour trip, three-hour trip. He was getting in trouble because midway through the flight, he stood up and started doing pull-ups with the overhead storage.
Just got to get swole on your way.
Apparently. He just kept doing it, and passengers asked him to stop, flight attendants asked him to stop. They actually ended up diverting the plane and landing, an emergency landing, to kick him off and arrest him for doing pull-ups.
Okay, that seems...
if you have to get your workout in, do it before.
Do it before
in the
you
airport.
leave.
Get there early.
Yeah, do it before
maybe
you
in an
leave.
airport somewhere.
You're sitting there eating your Chick-fil-A at the airport. You got to get your pull-ups in before you get on the plane. And last but not least from me, housing. It's a whole lot less affordable than it was 1 year ago. Yes. Okay, two components of this, price and interest rates, right? Mm-hmm. So on the price side of things, the S&P, CoreLogic, Cash Schiller, U.S. National Home Price Average.
That's a lot of words there.
Was up 19.8% year over year. 19.8% year over year as of the last reading.
20%.
20%. The same house is 20% more expensive than it was last year.
That's crazy.
Okay? And here's just the kicker. 30-year mortgage rate. So 30-year fixed mortgage rate was 3% 1 year ago. That's pretty reasonable. That's cheap.
That's cheap mortgage.
Now, it's nearly 5.5% on average. And that together is going to cool the housing market, which had kind of gotten pretty hot.
Yes.
And maybe a little bit too hot. So that's one component of inflation that may take a bit of a pause going forward.
I saw between those two, the average monthly mortgage payment went up over $1,000.
Oh, yeah.
Just between higher interest rates and a higher purchase price.
Yep.
It's crazy.
It is crazy.
And my last one is there's a lot of technology and advancements happening. 3D printing is a thing. Obviously, it's been around for a little while. There's a new startup called NovaMeat who's using 3D printing technology to manufacture vegetarian steak. So it's not meat, it's vegetarian. The reason they're doing that, though, is it's to test it. And when they get a successful combination of different, meat products, they can then mass produce it using normal production.
Still.
But they were at a couple different fairs, and they had some their goal is to replicate the texture of the meat. So that's what they're doing here with the 3D printer, right? Because they already had the meat-based products, but their goal here is to get the steak look and feel. And so they're getting really close. Their hope is to get that out. But they use these little capsules to make them because it's cheaper than mass producing something that no one likes. Of course. So interesting though. If you ever want to try it, I'm sure it's out there.
I generally say I'll try any food once. Mm-hmm. I don't know about that yet. I might not be there yet.
Okay.
Well, maybe one day, Josh. You surprise me. You say, "Hey, Johnston, I'm going to take you out for a steak dinner."
Let's do it.
And then you surprise me with a 3D printed vegan steak dinner.
I'm sure it's good.
Hey, we'll see.
Put enough seasoning on it, you'll be all right.
Salt, pepper.
All right. Well, this is Josh Robb
and Austin Wilson
from Hixon Zuercher Capital Management giving you the May update of April 2022. If you have any questions or thoughts, you can contact us at 419-425-2400. And everything we said today is not a recommendation, so please make sure you speak with your financial advisor. We will talk to you next month.
Bye.
All right.
Hello, I am Ron Burgundy. Okay, I'm going to start over.
I was bouncing anyways in my seat.
Josh Robb and Austin Wilson work for Hixon Zuercher Capital Management. All opinions expressed by Josh, Austin, or any guest are solely their own opinions and do not reflect the opinions of Hixon Zuercher Capital Management. This is for informational purposes only and should not be relied upon for investment decisions. Clients of Hixon Zuercher Capital Management may maintain positions in the securities discussed. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.